So, while we're getting set up for the next panel, allow me just to say, similarly, we're going to try to use some live polling, and I think you'll agree it adds some real value to the discussion. It allows us to see, are we talking about the right things, essentially. So as I said, that panel really teed up our next discussion very well, because we're really going to get down into the details now. We're going to discuss in further depth the ESG regulatory framework. And similarly to the last panel, I'm joined by a group of experts, and I'd like to now welcome on stage Boon, Jeanne, who's the CEO of SGX Singapore. So welcome, Tan. Matthew McAdam, who's the Director, Asia Pacific for the Principles for Responsible Investment, Australia. Dr. Anthony Miller, who's the Coordinator of the Sustainable Stock Exchanges Initiative at the UN in Switzerland. Jeanne Stampe, who's the founder of the Asia Sustainable Finance Initiative and the head of Asia Sustainable Finance Global Finance Practice at WWF Singapore. And Ms. Paralee Sukhonthaman, who's the Deputy Secretary General of the Securities and Exchange Commission of Thailand. So, welcome everybody to the panel. So I feel like the last panel, in one respect, almost sort of covered some of the ground that we were going to touch on. But actually, I think it just allows us to get into an even greater level of depth and to further drill down into some of the details about the ESG regulatory framework. So we had that interesting discussion about should Asia follow the path of Europe, or is that a case of one size doesn't fit all? So I'd like to, as the panelists introduce themselves and explain how they're coming to the ESG debate, if they could give their perspective as well on how they assess the current ESG regulatory framework. And let's start by going from left to right. So if we can start with Boon, Jeanne, please.
All right. I'm going to give my perspective as a regulator. So I would like to start with the origin story of ESG. So ESG first appeared in a UN study entitled "Who Cares Wins." So it's not just about doing the right thing. It's about winning. It's about winning. So the promise is that if you're a company that cares about ESG, your performance will be better. And if you're an investor that invests in a company that cares about ESG, you will get better returns. So to me, as a regulator, a good ESG regulatory framework will have to achieve three things. The first is data to show the link between caring about ESG and superior performance. The second is companies producing data to demonstrate this. And finally, investors consuming data to validate this.
Excellent. Please.
So I guess my opening observation as the PRI is that there are more policymakers, I think, in the right places, in more markets around the world that are on the same wavelength as investors now when it comes to sustainability. And there's absolutely no backtracking from that. So at the PRI, we've been tracking policy developments now for a number of years, and there are over 730 pieces of legislation, regulation legislation around the world that now encourage or require investors and companies to to think about ESG issues. And something like 80 of those, or over 10%, have been introduced just in the last 12 months, which is astonishing. So there's sort of a Moore's law almost happening now for sustainable finance and policy, which, as I said, there's no going back from.
Excellent. Anthony, could we get your perspective, please?
Yes, sure. Last year we published a report on how securities regulators can promote the SDGs. And one of the things we always do is we just focus on what people are already doing. We try to avoid what I call blue sky ideas where we think, gee, wouldn't it be nice if ... Rather, we say, what are they actually doing in the marketplace? And what we found is that quite a lot. There's quite a lot going on already. Certainly more can be done. But a lot of securities regulators are already engaged in, and I'm sure we'll hear more about that, on ESG issues in their marketplace. And there's a wide spectrum of what they can do. Because typically we always just think about passing rules around disclosure. Yes, that's an obvious one and it's an important one, but there are a lot of other things they can do around product development, market education, and so on. So I think that's a key thing to watch. There's a theme that I think I've noticed pop up in a number of the questions, previous panel, this panel, about what maybe Asia can learn from Europe or what have you. I think really, to some extent, the question should be reversed. What can Europe learn from Asia, and what can developed markets learn from emerging markets? We launched the Sustainable Stock Exchanges initiative 10 years ago. It wasn't launched as the Emerging Markets Sustainable Stock Exchange Initiative or the developed markets. And at the time that we launched it, many people expected, we'd get very slow take-up in emerging markets. And the opposite has been true. We've had very strong take-up. Thai Stock Exchange has been one of our more active members. They do a lot of excellent work in this space. And I think that there's a lot of developed markets that could perhaps learn a lot more from what's going on in emerging markets, both from the regulators and the exchanges.
Absolutely. Excellent point. Jeanne, can we get your perspective?
Yeah, sure. I think there's a very wide range in terms of the regulatory frameworks out there now. If we look at the three key pillars of what a good regulatory framework should contain. If you look at the first one in terms of taxonomy, you see that it's only the EU and China that today have some form of a taxonomy, but that's only limited to the green side, and other countries don't have that. The second pillar, we look at scenario analysis. So again, you have certain regulators proposing to conduct stress tests and scenario analysis across their financial system. So if you look at Bank of England, doing that across a series of climate pathways, including net zero by 2050, and then you see that other regulators are at this point silent on scenario analysis. And the third is, of course, disclosure, where you have multiple stock exchanges and regulators asking for disclosure, but leaving it up to the companies to decide what is material. Right? And then you have, on the other side of the spectrum, you have the UK and EU already signaling that they want to make TCFD mandatory. You have the French, which has already gone ahead in terms of Article 173, that all financial institutions have to disclose how they manage climate risk. And just recently, in September this year, that was amended to also include how financial institutions manage biodiversity risks. And that was on the back of a report that the French Ministry for Ecological Transition commissioned AXA and WWF to write, and that was presented to the G7 Ministers of Environment meeting in May. So you see, that's one end where it's compulsory for everyone to disclose and to convince the market that this is not a risk for me, or this is a risk and this is how I'm managing it, to the other end, which is we'll let the companies, and same thing for the taxonomy. One can describe what is green, using one's own subjective calibration, or there is the taxonomy.
Absolutely.
And
Ms. Paralee, can you give us the perspective of Thailand? How is it coming to the discussion? And then how has the SEC here approached the regulation of ESG so far?
Yes. As to the regulator, our main objective is to create, the confidence and trust in the market, and also the integrity of the capital market. So, in order to the success of creating a strong ESG development in the Thai capital market are linked to the three mechanisms that the SEC followed. Regulation, sale, and market. Above all, it is the commitment and involvement of the SEC and other relevant agencies that have played a role in the development of the ESG in the capital market. Through various measures with the emphasis of self and market initiatives, the SEC has adopted regulations, and it also remains important. For example, the rules and regulations and guidelines that the SEC has been issued, and also the preventive measures, disclosure and risk monitoring system, and enforcement that the SEC has been, has been undertaken all along. The self-discipline, concentrates on company and its board of directors. So in this regard, the SEC requests the board of directors to integrate ESG into their business operations and create sustainable value creation. A new CG code, for example, of listed companies later expanded to ESG was issued in 2017 to be used as a guideline for self-disciplined business practice and activities. In this regard, board of directors are expected to take leadership role in setting goals and leading towards sustainable growth organizations. Lastly, market force discipline, which is the third. This, on the other hand, focuses on encourage more on external push towards ESG development of listed companies, i.e. forces of investors, in particular institutional investors.
Excellent. Well, it sounds like quite a lot has been done already, and I mean that's clear as well from the discussion about what's happening in other jurisdictions. But Boon, Jeanne, quite a lot is happening, but is it enough? Should there be more? Are we focusing on the right things? Where should we be focusing?
Okay, I would like to draw a very important distinction here, all right? So you have the regulatory frameworks which are mandatory, right? And then you have the reporting frameworks which are voluntary. So I think it's very important to recognize this distinction. So if you look at what the regulatory frameworks are focusing on, they are focusing on mandating ESG reporting by companies.
Right.
So there is less emphasis on reporting by investors, and also they are less prescriptive in terms of the reporting format. So this results in a few things. Number one, instead of metrics, you will see more activities being reported by companies. So that's the first thing. Secondly, the link between ESG and performance is less clear. And finally, in terms of the data produced, it is also not easily comparable. So these are the three manifestations, right? Compare this, though, with the voluntary reporting frameworks. If you look at them, they are more prescriptive in terms of the format. So the data is more harmonized, it's more comparable. And this is especially true for those that are industry-specific. I think the industry-specific voluntary frameworks do an excellent job in terms of being able to demonstrate the impact of ESG on performance. And if you look at other voluntary frameworks like the TCFD, it doesn't just focus on companies, but it also focuses on investors,
right,
and how investors should be incorporating ESG into their decision making. So I think the next step for us is how to bridge this gap between the regulatory framework and the reporting frameworks. And someone mentioned earlier from the other panel that Asia likes guidelines. And I think that in Asia, the only way to do this is by expanding the regulatory framework.
Excellent. Well, let me jump over back to Jeanne, because one of the things that came up when we were discussing earlier was around this issue of mandatory disclosure. And do you think that mandatory disclosure requirements like TCFD and that Boon Jeanne mentioned actually provide the solution? Do you think that is the way to go, this mandatory sort of approach? Because it's still voluntary, but in Europe now TCFD has been integrated into the non-reporting financial directive for the climate-related guidelines. So it's non-binding, but you can see it is the sort of the thin end of the wedge. Essentially, it is certainly heading in one clear direction.
I mean, disclosure is key for efficient capital markets, right? So, but what is more important is what is being disclosed, right? So you can force everyone to disclose what they're doing about climate and the results of the scenario analysis, their strategy, their targets, right? But we need to have some guiding principles. I mean, Dr. Siri mentioned this morning, there is no planet B, right? And Alex in the previous panel talked about science. So if the companies are provided with a library, and NGFS is talking about doing that, and potentially with TCFD as well, a library of common scenarios for each sector, then the information that is being disclosed then becomes A, consistent, B, comparable, and decision useful for the market, as opposed to everyone creating their own scenario and disclosing what their targets are without the market understanding how do these targets look in light of where the world needs to get to, right? So different companies can have a different level of ambition, but the context needs to be there, and that context is science, right? Because we can't have one version of green in one market, another version of green in another market. We can have slower pace, right, and a lighter shade of green, but we can't have two different versions of light green as such. They're just confused, because then you come out, anything that you disclose just becomes completely incomparable, even within a country, let alone across borders.
But isn't that the, and I'd like to get Anthony's and Matthew's perspective on this as well. Isn't that potentially, though, the risk that you will end up with different shades of green in different jurisdictions? Because even if you take something like TCFD, which is global, as soon as jurisdictions start sort of hardwiring it into their own frameworks and making adjustments, etc., do you run the risk of having then fragmentation across markets? Because in some respects, the EU Commission just recently launched as well its sustainable finance, an international forum on sustainable finance, and of course, in some respects, it is very much to ensure that its regulatory approach is sort of exported to the rest of the world. So how do we avoid, though, that fragmentation across markets?
Joe, I think, if you're asking me how do we avoid being imperfect, I think the answer to that is we don't.
How do we manage it then?
We manage it the same way we manage it everywhere else. We've been having a conversation about financial reporting for about 100 years now.
Right.
And we still live in a world where if you have 10 accountants in a room, you're going to have 11 different opinions. Yeah? Now, you have IASB and the international IFRS, and yet when countries implement IFRS, they often will make very small little carve-outs here and there, so there can be little things. Yet somehow, the global financial system adjusts to it and works with it. So I think we need to also be a little bit careful about being too hard on emerging ESG standards and regulations and putting a burden on them or raising the bar far higher than we would ever do for financial reporting.
Right.
There might be local variations on some of these things. I think investors will read through those the same way they do for financial reporting.
Excellent.
There's nothing wrong with different shades of green. You actually need different shades of green, because not everyone or every company in the world today is going to have operating activities that meet the EU taxonomy, for example. And the whole idea is to actually build out the different shades of green all the way through to the brown. I mean, Mark Carney just talked about that at the UN Climate Summit. And different countries and different companies will be at different parts along the spectrum, but we're all using that same color chart. So what you say to be light green in the US is the same as light green in Thailand, but a company here may be, darker green or darker brown. Same thing with another company in the US, but we're using the same calibration system.
Okay.
Yeah.
You're dying to get in on that
Yeah,
point, I
so
can see.
I think it's very important here to recognize that when we talk about fragmentation in ESG, right, it's not talking about fragmentation in the balkanization sense, meaning that we're not talking about domestic regulators raising barriers because they are afraid about importing harmful risk, which is what we're seeing in the swap markets. So this is not about MiFID II versus Dodd-Frank, right? In fact, I would agree with you. The analogy I would draw would be US GAAP versus IFRS, and so I do think that there is a greater chance of convergence.
Yeah, I just support everyone else's points that this is about transparency and disclosure, and that's a first step. I think obviously countries around the world have very different ways of meeting their commitments under the Paris Agreement, and investors are used to operating locally and operating regionally, and certainly the progressive leading investors in Europe on these types of topics will be supportive of the development of local taxonomy which recognise those differences.
Excellent. Well, I'd like to bring in the audience now at this stage. So if we could go to the live polling, and it should be appearing on your screen.
Can I add something?
Please, Ms. Paralee.
For us, we support the taxonomy. We follow the movement pretty closely, but as to regulator, when before we issue any regulation, we have to analyze, the ecosystem of Thailand. We have to analyze also the cost benefit of our regulation, and also we have to listen to our stakeholders to see if the cost has, the benefit has outweighed, the cost before we issue any regulation. So let's see if the outcome will be.
Absolutely,
Yes.
Absolutely valid point on the cost benefit, and and the importance as well linked to that is any of these measures being grounded and essentially being based on, it was mentioned earlier, the science and the data. Thank you. So let's now launch the live polling question, and it's on your screen now, and the question is, can regulations advance adoption of ESG in APAC? And I'm not really surprised. It'll bounce around a little bit and stabilize, but I think it's quite clear that it's overwhelming that the feeling is that yes, it can, which I then guess brings us to the question of, okay, how and what next? What should be the sort of the future priorities? If you were sitting here as a regulator, and you are sitting here as a regulator, what should we be focusing on next? As we think about the next, where would you like to see us in a year, 5 years? Where do we need to be in 10 years, essentially? So if we start off again with you, Jim Boon.
Let me just share what we're doing here in Singapore. We mandated sustainability reporting just last year. So this year, we're going to collect the first wave of reports. And what we're going to do is we're going to do a review of all the reports. And we are going to engage investors as well to help us in reviewing all these reports. And then we are going to issue to every single company a scorecard.
Okay.
All right, with investors' input as to how they did to help them to improve. Now, somebody actually commented that, is this a little bit of a babysitting, right? And my response to that is yes, but I think we need to be very cognizant that there is a factor here that should not be underestimated, which is time. So I think we need to do what we need to do.
But that's interesting. Who responds like that? And who potentially pushes back against that approach?
You have no idea.
I probably do.
Well, I don't expect this to be an easy conversation, but I do feel that there is an imperative. And what really heartens me is that there's global leadership. And recently as well, I feel that it's growing national leadership.
Excellent. Matthew?
Yeah, so let's be honest, organizations like the PRI only exist because there isn't global policy frameworks to require investors to think about ESG integration and disclosure. So our ambition is obviously to put ourselves out of a job in the next decade, but I think somehow it's going to be a lot longer than that. I think our priority at the PRI is climate action. There's a massive gap between the rhetoric and the action on the investor side. We obviously have the biggest market failure in climate change insofar as governments are committed to the Paris Agreement and 2-degree target, but we have investors and companies that are still operating as if we're on track for a 3, 4 and 5-degree world. And I think it's global initiatives like the G20 study group on sustainable finance and the NGEFS, and action by a lot of prudential regulators to look at scenarios and stress tests and to standardize those around the world, which will help to close that gap, because once it ends up on the balance sheets and the P&L statements of companies, then it has the attention of the portfolio managers and the CIOs.
Anthony, where would you focus the firepower?
Yeah, I think what you're seeing now is a global trend of regulators coming in and making mandatory ESG disclosure. We're up to about 26 markets in the world now where it is mandatory. And that number less than 10 years ago would have been less than 5. So it's a very fast, rapid uphill climb in that space. So that's clearly an area for security market regulators. I think the example we just heard from Singapore is a very good example of illustrating things you can go beyond just simply saying this is mandatory and then walk away. You can't do that. And securities regulators, they play a number of other functions in the marketplace, including providing education to market participants and feedback and so on. So I think this is a very good example of kind of the soft power of securities regulators to get involved in the marketplace. One thing that I think is missing from this conversation a little bit is we talk a lot about the work of securities regulators because we're talking in a sustainable finance context, but we also have to be in mind when we talk about regulation of the real economy and the impact that will have on the world of finance and investors.
Excellent. Jeanne, can we get your perspective?
Yeah, I'd just like to say that, with the Network for Greening the Financial System, you have very good Asian representation. You've got China, you've got Japan, you've got Singapore, Malaysia, Thailand, and another 2 waiting in the wings. And I think that will really help to bring some form of harmonization globally, and also help to empower the Asian regulators to perhaps take a step further. And, the NGFS is not just banking regulators, it's also the insurance regulators, on the investment side, so it's supervisors and central banks. So I think those are other parts of the market that do affect, the ability for any listed company to get bank financing, to get insurance. Those are things that an investor also needs to think about, and those parts of the regulatory system are moving actually faster. Right? So, EU, of course, on the investor side has mandated disclosure by investors of the E&S impacts of their financial portfolios, as well as the financial risks from E&S issues. But that is quite rare from that point of view. Otherwise, the regulations have been more banking and insurance industry heavy from that point of view. And I think that's also where there needs to be a better dialogue because of course, the interlinkages, and the insurers themselves are also investors.
Excellent. And Paralee, what future measures can the audience and can we expect here in Thailand from the SEC?
We're planning to take about six initiatives. First, we planning to increase number of ESG funds. In this, we are planning to do that through the two associations. First is the Associations of Fund Management, Asset Management Association. The second is the Ministry of Manpower, which is the government. And because we find that currently there's only 11 funds at CG funds, and that only have 26 billion baht. Number two, initiatives we're going to increase innovation, sustainability, theme, capital market products and instruments. For example, CG funds, green bonds, social bonds, sustainability bonds. By doing that, we have already rules in place, but we're doing more, amend rules, and also we can do fee exemptions, for example. Number three, we find that our listed companies have better CG performance, but most significant performance remain large companies. So we trying to work on small and medium cap companies. So we trying to do like tutoring session. We trying to, through our partners, for example, IOD, Stock Exchange of Thailand, we're trying to work on those smaller firm size and trying to talk to them that how to prepare for the assessment program. 4, we're trying to strengthen market force development by institutional investors. By doing this, we have 3 sub-plans. We support GPF, SSO to set criteria for choosing fund management companies based on the level of compliance with the I code. And also, we establish a core platform for coordinating and networking with major institutional investors to get feedback, from them. And we also want to increase PVD signatory. Number 5, we want to promote the implementation of the globally recognized principle of human rights protection, UNGPs, because in the middle of the year we have signed MOUs with the National Human Rights Commission in May 2019. And we want to embark, this also in the ESG issue. Lastly, initiatives number 6, we want to be serious on the implementation side. So we considering, working together with some institution to analyze, and also rating, like tick box and also dialogues with firms of all sizes, trying to rate, really rate the implementation of all those firms.
Excellent.
Yeah,
Well,
that's all what
sounds
we're
like you
going
have
to do.
a
lot to
full
do.
work program. Exactly. We should probably plan to come back here in the very near future to see how that's going. A final question, just before I think we head into the coffee break. It struck me that it came up a number of times. We talked about security regulators, and actually we need to speak about prudential regulators and central banks as well. But actually it's broader than that as well, right? So is there enough actual coordination, going on even between securities regulators and central banks, but then widen that to civic society, NGOs? What about the unlisted sector as well? Sort of in the minute or two we have left, does anybody want to jump in there and give their perspective on sort of the need for actually wider coordination on this, and actually potentially across political collaboration as well, in terms of, if it's possible, depoliticizing the issue and everyone agreeing that, this is science, this is facts, and actually, we're all working towards the same goal. Anybody want to jump in on that?
I would just jump in on one thing, which is the source of regulation, again, going beyond securities regulators. It's not only other central government regulators, you're even looking at municipal regulators. So, for example, in New York City, they passed much more stringent rules around the efficiency of buildings. Now, for any investors that hold large portfolios of real estate, there's going to be a one-to-one correlation between, retrofitting a building to make it more efficient, and all that money that's going into insulation is not going into dividends now. So this is something where I think for investors, certainly, they have to keep a broader perspective on the source of regulation, but also for securities market regulators, when they start thinking about systemic issues in the marketplace, which is part of their core mandate, they have to be aware about how climate can become a systemic issue throughout broad areas of the financial markets.
Excellent. Any final word on that?
For us, in Thailand, we have this national plans, for Thailand. Which will last about 20 years, and also the government direction, just released their direction, earlier this year, and that would include, CG, ESG, and all these 17 UN, SDGs, so it relates, all these. The SEC also embed its plan, following these principles.
Absolutely. Well, I think we've run out of time, so I believe we're now heading into a coffee break. So, ladies and gentlemen, please join me in a round of applause for our distinguished panel of experts.
Thank you to all of our panelists. Joe, thank you very much. We're going to let you stretch your legs for the next 10 minutes or so, grab a coffee, some refreshments, and if we can be back in the room for around 11:30 so that we can stay on track and ensure that you get the best out of the day. Thank you very much. We'll see you shortly.